Welcome, everybody, to this synthetic Tuesday afternoon. Yes, short week, folks. We got a very short week. We have, of course, the holiday on Thursday, half day on Friday, but we got plenty of trading action to cover. What a week. We will cover the week that was, the rally on Friday, perhaps setting us up for a year-end rally. We got some good news. We got some bad news. We have a drug stock getting annihilated today. We'll talk about Novo Nordisk. Not much earnings, but we'll talk most recent earnings. We got some economic data coming out. But you know what I'm looking forward to? At 8:35, Danny Kirsch, head of options trading, Piper Sandler is trading ideas, folks. Get your pen and paper out. We got a jam-packed show here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Strong close, strong after hours. Dennis was telling me about all those bids out there. We're up 38 handles at 66.58, just off the highs of the pre-market session. Buck right at par here, above the 50 and the 200 day, right there, 100. TLT up 23 cents, 89.73. USO cannot catch a bid. Down 30 cents, 69 even. GLD and SLV both in the green by about 0.3%. In Bitcoin, according to Jeremy Newsom, it reached its 100-day EMA. That's where you got to buy. That's up $1,325, just under 86K in the futures markets. TradeStation. Our sponsor of the charts. We're going to be learning a ton more about TradeStations, all of its great programming functions here in December, and a heck of a lot more in the new year. Dennis, who will be working 5 straight days this week with no break at all. How you doing, Dennis?
I'm doing good. I'm a little bit still congested. This COVID/cold, whatever the hell I have here, just it lingers. It lingers. Like I feel okay, but the nasally part of it, a little bit of congestion just lingers on. And maybe that's just the way it is. I think we all just get COVID a little bit, and then we come down, we go up, we go down. And that's just kind of how it is. Like maybe we all just got permanent COVID here. And, sometimes
No, it's your
Joel
kids.
doesn't.
It's your
Joel
kids.
feels good.
You know what? It's you're on the kids. You just have
the kids
germs.
bring it home. And maybe you're getting more than one thing. And, when you sit at home as much as I do, and then you get exposure from, kids, you're probably, immune system maybe is not as strong as others that are out in the public all the time. I'm literally at home 90% of the time. And then the germs come in the house and my body's like, ooh, what are these? And then they just get nailed. So.
Hey, well, I'm proud to say I get the poke once a year, man. And I am just as strong as ever, man. Nothing.
You got the swimming in there. He doesn't have young kids.
Yeah.
It's the swimming, Joel. That's really your
flu shot. Suit. Did you get a flu shot?
I never get a flu shot. No,
oh, okay.
I never did.
Well,
maybe I should start. Maybe I should start. Vote in the chat. Do you guys still get flu shots, COVID shots? Let us know. 1 for the flu COVID shot, 2 for no flu COVID shot. Let us know what you're doing out there, how you're feeling. Are you guys healthy? Are you guys sick? How y'all feeling? Let us know.
Oh, they're ready, man. They are ready. They're ready for a big week here. Big week, big day on Friday. I mean, the Bulls came out in force. They came out in force, Dennis, and I
don't think they came out in force. I think we're giving them too much credit, but they bounced. They came out of their caves. They did come out in force over the weekend, though. And, we talked about this in the Stock Trader Network. And, if you're just doing our weekend trades, you are absolutely killing it. I mean, there's other trades, we hit and miss on lots of things, but the weekend trade, we have been killing that one for a very, very long time. I don't know how many weekends in a row we've been up. I feel like, I know Ryan Dietrich had a stat a while ago. I feel like we had a down one in there, but I feel like it's like 11 of 12 weekends on Monday morning that we come and we're higher. And it's always the same stocks leading the way, the retail darlings. And I firmly believe, the Robinhood people are so excited because they haven't been able to trade. They trade the Friday night, then they can't trade Saturday. And they come in, they're so excited for that Sunday 8 p.m. open. that they buy all their retail darlings, and these things are all the ones that run. What are those stocks? Tesla. Tesla 2.16%. Has awesome Mondays all the time. That's why we buy it on the Friday and we flip it out on the Monday. Yes, I still have it in the long-term account, but we can trade. You can have, two accounts. You have your long-term investing account, and you have your trading account. You can do these trades in your trading account here too. But, all those stocks that are just loved by retail, they really are the ones that have strong weekends. Brentster, how's his computer? He's having a little bit of trouble with his computer. We'll see if Brentster can come in and say hi, see if he's working. He might even be frozen up again here. I think he is actually. So Brentster is working on his PC in the background. It blew up on him this morning, but he's trying to fix it. So right now you're stuck with me and Joel. The Brentster is frozen. But man, there has been, just opportunities on this weekend trade for a very long time. The question is, do we get the follow through? Because a lot of times what we see happen is we get the strong weekend trade. We're very strong into the open on Monday. And then all of a sudden, 10 o'clock, there's a rug pull, and then we start to see sellers coming again. I mean, this market is setting up, I believe, for a lot of chop. So I don't think bulls are in firm control here. I don't think bears are in firm control here. 2 days ago, bears were definitely in control. Now it's like chop, back to battleground, where you got, the bull case is, hey, we're coming into December. This is historically a very strong seasonal period for stocks. Everybody gets excited. The Santa Claus rally coming later in the year. People get excited for stocks during this period. The bears are saying, hey, we've broken momentum. We've broken the 200-day on a hell of a lot of momentum.
A lot.
And, that technically speaking, we've been overbought for a while on a lot of momentum stocks. So there is a good case for the bulls. There is a good case for the bears. You know what I think that equals? A lot of chop. How do you play choppy markets? You sell rips and you buy dips. That's how you do it. I mean, bring up Palantir. Joel, we'll start going into the charts because this is the darling of darlings. Obviously, the stock, has been very resilient, made a new all-time high. Just going back here, just to the beginning of the month, it made a new all-time high on November the 3rd. Since November the 3rd, Joel's leaving me now. But
no, I'm not leaving you. I won't leave you alone. I forgot to get something off the printer.
Oh, he's got his print. Oh, he's got something printed out for us. But if you look at Palantir and you look at that bottom right chart here, or even the top one, we have broken now the 50-day. We are approaching is that the 200-day?
Yeah, you got it, baby. 200-day.
We're approaching the 200-day. I mean, so it's been a very sudden sell-off. We've lost 25% in a matter of 3.5 weeks. So it's been a pretty good hit to the darling of retail darlings. This is not just Palantir, though. We know the momentum stocks, all of them have broken. Actually, Palantir probably held up better than a lot of the other names. The quantum stocks are a complete mess. You bring up a stock like Oklo, and it's just a complete mess, too. Some of them are down 40, 50, 60%. So Palantir's actually held up better than some of the other ones. But thoughts here? I mean, let me know, chat. What do you guys think? Because I think we're at the crossroads. I think it could go either way here. I think the selling pressure could continue, but I also can see a case where seasonality picks us up and we're strong to the end of the year. And maybe some of these stocks are actually buys on dips. So let me know what you think.
Oh boy, you threw out so many different things there. First of all, I wanted to go back to what you said about the overnight trading, just real quickly. You put a lot of those trades on going into the close, right? You don't know what's going to happen after hours, but I was listening to you and Brent a little bit, spying in on you, and you were just like, there's just bids out here. There's just bids out here, and you were looking, and I was looking to, try and buy the actual close, which was 2050, which we hadn't seen. And so you had the strategy, but then when you were looking at the markets after hours, you're like, there's just bids out here. That's all there is. There were no offers. So that gave a little bit of confirmation of what you're going to see Sunday night. So I just wanted to get that in here.
They started buying at the 4 p.m. close on Friday, and they really didn't stop. And we have seen this time and time again. The stocks are just very strong, usually into the weekend. I don't know why that is, but it's a pattern, and that's where you can identify. So my weekend longs that I posted in the STN room, these are posted. I post them at 3:52 p.m. I said intend to buy. I tell you which stocks I intend to buy on the close, so you can actually front run my trades if you want.
They do. No, they don't. No,
I think some of them do, but that's fine. I'm posting them before I've taken. I did Zoom because it reports here tonight, and usually like
Catalyst.
I did Zscaler, that's up 1%. I did HIMS. That's up 1%. I did better, BTR for buddy Eric Jackson. That's up 1.2% or 1.7%. I did MP Materials. That catches an upgrade, so that helped a bit. That's up 3.8%. I did RCAT. Long. These were all longs. Up 1.84%. I did Pony. That's up 5.6%. I did Soundhound. That's up 1.6%. IREN. You can see I'm picking on the retail like momentum stocks going into a weekend. Up 3.53%. I've sold most of these stocks already this morning. I'm in a few of them still, but I'm out of most of them because the money's there. That's what it was. It was designed to be bought and sell into Monday morning into the strength. Tesla's up 2.21%. I did Tesla. IONQ up 2%. Viva Systems, it's up barely 0.14%. I did that NKLR again just for a weekend trade. It worked out as well. It's up 2.68%. I did CIFR up 5.3. I'm reading them right from this. I'm not missing any. I'm reading them right from the list. STN Room can see that. ASTS up 2.63. CORZ up 1.83. And I did this ECX because of stocks in play, but it didn't move up at all. And then I did short UNH, and that was I actually got out of that last night, but that would be a loser here this morning. So you were short that you did. It was a loser. You can see this isn't rocket science here. It's just the fact that they're strong. Retail names are typically strong on the weekend. So we get paid again for that trade. Does it continue? Does it continue, the weekend trade? I'm going to continue to do it until it doesn't work anymore. And right now, the weekend trade is super, super hot.
Did you slap any SPY on with it? Or,
a little bit short SPY. Just because, you know what? If something bad happened, you'd be in trouble. But overall, it was a great trade for me over the weekend. So I lose a little bit. That's my biggest loser will be my SPY hedge. But all those long trades are awesome. So, I mean, you can just do them long. But, I mean, if you had something bad happen, at least, the SPY would help cushion the blow a bit. So you know how I like to trade market neutral. I trade a little bit biased long on the weekend. I always stay long a little bit, like overall in dollar amounts. But, a lot of these stocks are up way more than SPY. So, you're making on a lot of these names. Like when the stock's up 1, 2, and case of like MP like 4 or 5, or IREN up 3 or 4, that's where you're really making some money. So yeah, it's great.
Well,
and you can follow along if you join Stock Trader Network.
Said if you beta hedge, then you're not making any money, Dennis.
No, it's about how you're hedging, Joel.
Exactly.
Like so here. So yeah, you could say people don't understand market neutral trading. They're like, why would you ever do that? You know why you do market neutral trading? Because when you have bad days and bad months like November, think about what the November's doing. Market neutral cushions the blow. So, if you're just biased and buying stocks all the time, you're getting dinged. So I'm not saying you have to do market neutral trading, but what it does is it smooths your earnings curve. It allows you to be profitable most days. You're extracting the real alpha from your trading strategies, not just a moving up market. But I mean, I directionally bias myself too. I was long a little bit. I didn't short as much SPY. And SPY is like less volatile than these
exactly
names.
That's what I was going to say.
So you've got to look at beta too. Like if the markets would have been down, I would lose money on that trade. But I wouldn't lose as much as SPY would help me a little bit anyways. But in some cases, like Tesla just likes to be up every week. And I've seen cases where SPY is down, Tesla's up anyways. Just because the retail community just loves that stock so much. And they're hardcore. So I'm going to say this. I firmly believe that institutional money controls intraday trading. They still do. The big bucks control it. That's why you see these violent reversals. But I also firmly believe that retail controls the after hours and overnight session because there is a lot less bots, there's a lot less institutional money, it's less liquidity, but they're all excited and they're out there and they like being able to trade a stock at midnight. So I think if we're looking at drivers of price, retail drives the bus outside regular trading hours, and then institutional money still drives the bus inside trading hours. Write that down.
And just to illustrate what Dennis just said there. Okay, so the SPY is trading up 0.69%. And we're just going to do this with a few stocks. Tesla is up 2.25%. IREN is up 3.38% versus 0.68%. MP is trading up 3.76% versus 0.68%. So there you go. I mean, yeah, the hedge, but if something's up more on a percentage basis, oh yeah, I'll take, the little loss in the SPY or the S&P or whatever you're using for your hedge. But great explanation there. Not always a strategy, but we had a good day on Friday. Very good day after a rocky week, and stuff was bid after the close. I mean, it's just putting things together. Just got to go real quick. We don't do a lot of macro, but Russian-Ukraine talks are moving along. Whatever the catalyst is, whoever's doing what with whatever, that with the war ends, I mean, that's something that people like and could be good for the market. So just wanted to cover the little macro that we do on this show. So this hopefully,
I mean, the markets are very strong here this morning, but think about what I just said. Retail very much controls after hours and the overnight session. Retail primarily is long. So here is, the thing is that we often show a lot of strength overnight, primarily because retail is voting with long dollars. That's why this weekend trade usually works. That's why, overnight trading bias to the long side usually works. I mean, if you think of, the longer term performance, there's been statistics, and I don't have it with me in front, that most of the market's long-term gains happen overnight and not intraday. So think about that. So when you're just jumping in here and saying, hey, man, I'm going to just, buy all these stocks at the open here, you're kind of doing it backwards. The better trade is to buy at the close, because a lot of those overnight and this has been going on for years. It doesn't work every night. Like this will happen one day or 2 days this week. People will say, Denny, I bought at the close and, now we're down. What's going on? Your trade didn't work. Nothing works 100% of the time. Nothing. If it works 51, you make a lot of money in this business. The casino wins 52, 53% of the time. That is a huge edge. 53 is a huge edge. So don't expect anything to work 100% of the time. I know people are chirping me about Novo because I'm long it. Oh my gosh, my account's blown out. I was all in on Novo and it's over. No, it's 1% of my long-term account. And you know what? It's my long-term account. It's not in my trading account. I think Novo eventually turns it around, which can bring us to news here because they do have bad news. But, when I come in and I talk about trades and, my good trades, people want to point out that, I invested in Novo a couple weeks ago and it's not going well. So that's fine. Cool. Some of my best long-term investments I've been down in. It's a completely different animal. I'm looking at good companies at reasonable valuations. Is Novo a good company? I think it is. Is the valuation reasonable? I think it is. Do I think 10 years from now Novo is going to be higher? I think it is. Do I know where it's going next week? No. Did they have a bad trials? Yes. So let's go look. Joel, do you have the news on Nvidia?
I got the news. Novo Nordisk blockbuster weight loss drug flops in Alzheimer's trial. Huh. Wow, a weight loss drug doing Alzheimer's trial. I don't know if I'd have really high expectations for that, but
nobody beats the Alzheimer's stuff. But anyways, the stock is hated. Novo is absolutely hated. There's Oracle and Novo are two of the most hated stocks in the stock market right now. Absolutely hated, despised. Novo's despised. What turns it around? It's hard. It's hard to turn around in the short term. But 4% dividend, I think the company's going to survive. I mean, maybe it's not. Maybe this is it for Novo. This Alzheimer's drug failed and they're done. Maybe that's going to happen. Nothing's going to happen, but I'm going to bet the other way. So I'm sticking with my Novo. I didn't just sell it all out. It was not in my trading account. It was in my long-term investing account. Two separate accounts. They don't move. Like some people, have trades. Then they get down and they're like, oh, that's my long-term investing account. No, it's separate accounts. So you can't do that. Keep it separate. You have a retirement account where you're investing for the long term, and then you have a trading account where you do your little alpha extracting trades. Completely separate. Keep it separate, folks. So Novo, ugly. I'm sticking with it. I mean, it's ugly. It's breaking down. Would I have it on as long for a trade? No. Everything is broken on this stock right now. But I tell you, some of Warren Buffett's best investments was when everybody else was throwing it out the window. So I try to invest like Warren, buying good companies when they're in the gutter.
Let's see here. Wow, we got to go back a long ways here, a super long ways. Wow, you have to go back to okay. So real quick, programming note. The Bradster came over this weekend. And because, he's taking some time off. And so I got to get better on the news. I got to get better on the charts, right? I don't know if I'll ever be able to write on the charts. But one thing when we were discussing the charts, and Dennis, don't start with the whole three chart thing. But what I'm going to try and do is be a little bit more deliberate about the chart that I'm talking about and the cursor and where I'm at. So when we're hopping around.
There you go.
Okay. And
Pointing
I
it
will
out.
just say, I'm looking at the bottom right chart now. That's the monthlies, right? Because this is some historical data. If you've been waiting to buy this near its July 21 low, July of 2021 at 41.93, you just got a shot in the pre-market. So that's the low. It's gotten a little bit of a bounce of it. So from a longer term, the dailies look horrible. I mean, the dailies, the chart just above
Maybe
it.
you just want to stay away from it. Like wait until it goes up. Like maybe you want to do that. I don't invest that way. I don't even look at charts when I'm investing. I'm looking at valuations and putting my CFA hat on thinking that the company can turn around. But some of them take a long time. Some of them like go in the gutter for a very long time. But if you're not in options and you're not on margin, you have time to wait. I do think Novo is higher 10 years from now. I don't know. 10 weeks from now, it's probably lower. The stock just hated right now. 10 days from now, probably lower because the stock is just hated right now. I have no idea where it's going in the short run. So try to just keep it separate. But I mean, at this point in time, I feel like there's value here. That's just bottom line is I feel like there's value here.
Okay, let's go the opposite direction here with a
Sure.
stock that's moving higher. And Dennis, you were picking on this puppy for a while.
From a
Oscar
trading
Health.
perspective, yes.
Yes.
This was
No,
one
you-
of my probably better trades of the year. I probably got long this thing a dozen times, maybe more, maybe 20, 30 times over the course of the summer. It was just grinding higher. And, you know, I was taking it long overnight, long in the weekends. Remember how many times in the STN room we were long Oscar? And then I had it on actually for a swing trade too. Took a pretty good move from 14 to 20 on. So I had it in my swing trade account and I have it on in, over my night account. It was great. Momentum broke on this thing and just hasn't really been able to pick it up here. Here's the problem. Is momentum is completely broken on this thing. Now you get that huge dead cat bounce happening here. Give us the news here, Joel. Do you have it in front of you?
I have the news. Oh, that's the other thing that I've worked. I worked on my news layouts, and I found the tricks. I found out
Good.
why Brent is literally a minute ahead of me on all these news. I'm not going to tell everybody, but you got a nice pop here in Oscar. The actual news is the White House is to propose a new 2-year extension of Obamacare subsidies. So where we're at with healthcare, who knows? But the White House looks to extend those subsidies. Oscar looks to be a benefit of that. This is a huge move after making a new low of the move yesterday. $16. It's now I'm going to the chart, the bigger daily chart right here. I'll make it a little bit bigger. I'm looking at the 200-day. That could act as a little bit of resistance, you know, just in the short term. The best thing would be for this to establish a bid above $16. Will it ever come down and fill this gap here? Well, you can hope for it to come down to 13.55, but I think you will see some profit takers. You know, let's say you've been accumulating this thing under 15, under 14, under 13. You're just looking for a trade, looking for a pop. You can see some sellers here, but you're trading right at the highs of the pre-market session, which is 1670. If you're looking for a daily high to contend with, the next daily high, and I'm just giving you the numbers. Next daily high in this is 1788. That would be one hell of a move.
CNC moving up on this headline. Molina, MOH is moving up on this headline. UNH probably up a little bit too. It's up 2.66%. I think it's this headline driving UNH as well here. But Oscar up 23%. I just think if you're buying it here, I say this a lot, and I'm often right, you're doing it backwards. I mean, now if you're buying Oscar, up 23% in a market that's been selling rips like crazy, I just can't bring myself to do it. Could it go 17? Could it go 18? Sure. It could do anything. But I think the stock, you know, has been really under a lot of pressure. The stock's had technical breaking downs here. I think there's going to be people who are very happy to sell this rip here today. I think some of that's going to be institutional money, which will vote after 9:30. So I would be a seller of this rip in Oscar.
Yeah, if you're going to buy some here, maybe be prepared to buy some a little bit lower. That's
I just think, why are you buying? I think just core strategy, like at my core, why have I been in business, in the trading business for 26 years? Why have I been profitable trading every one of those 26 years? I think my core is buying dips and selling rips. I honestly think that. Like, I have lots of good strategies, but at its core, most of those strategies encompass that basic strategy where you're selling into strength and buying into weakness. This is up 23%. If you're buying this today, you are buying into the most strength ever. It's backwards. So I think why? Sure, maybe the 23% stock goes up 30. Maybe you're that kind of momentum trader, but you better have a stop, because of the momentum terms after 9:30, it can get ugly in a hurry here too. And it's not going to work all the time. It's not like I'm coming in here and shorting, maybe I will. I might actually short it, but I haven't considered that. But I think just not buying rips saves you so much money, Joel. Like, just like saying, hey, this market's up so strong. I think this is what people really do wrong, is they see the market up strong. They're like, oh, I got to go buy some stocks. Look how strong the market is. No, that's like backwards. I mean, again, like when you're seeing that weakness, that's probably the opportunity is better. Or just selling into the strength, because people don't sell is the problem too. A lot of people will sit on these things. And again, the diamond hands like you have, Joel, you're buying and investing in good companies. That's probably the best thing from a long-term investing, is never selling. But from a trading perspective, you gotta sell. I mean, this is your business. If you're a trader, it's your business. And buying and selling, when you get 23% pops overnight on an Obamacare headline, I gotta think it's more of a selling opportunity than a buying opportunity.
You don't know what the next headline's going to be. And you know what? Another thing with our Wall Street analysts, they like to pick on this stock too. I know there were a couple times when you were holding it during the rally, and they would come out and and pick it on a little bit. So, but look at the action. Keep an eye. Now I'm over on my the left chart here. And the left chart here is tracking the 15-minute session. Here, I'll just show you the after hours and the pre-market trading. Right here, sessions on your trade station. I go 24-hour. Boom, that's what I'm looking at. If I say, oh, I don't care about the 24-hour market, I don't trade, this is what it looks like. Oh, click off to the regular session. So that's what it looks like. So sometimes I forget to do that. All right, we got our guest coming on in 7 minutes. I think we have to talk about one of Dennis's favorite CEOs on Wall Street, because he's moving a stock and it's not his own.
Talk to me. What's the news?
Mark Benioff.
What's Benioff saying now?
He is saying that he used Gemini 3 over the weekend, and it is making a quantum leap over other AI. No one. They were behind. What was that first thing they had? Bard? Like, who came up with the name Bard? Who wants an AI tool named Bard? And he said, man, this is unbelievable what this thing can do. And the street, this is the hottest stock, man. The hottest stock. That's Google.
Warren.
Yep.
As soon as Warren buys, and it's been hot before that, but when Warren is in there, and I still don't think it was a Warren pick, I think it was new guy pick, but it doesn't matter. The market's like, man, Warren's in, we're in. Like, this is how we're playing it. And Warren turns stocks. Like, think about UNH too. Way back when it was 300, we got the news. Ran to 360. Now UNH has come off since then, but it had 2 months of strength after Warren bought it. I mean, sometimes, we say not to buy rips, but in the case of Warren Buffett, sometimes it's actually prudent to buy the rip. And they actually gave you a pretty good chance on this, which we talked about actually in the Stock Trader Network too, it was only up $5 that night, that Friday night when we found out that Warren had bought it from his 13F. And I was like, man, I don't know why it's not up more. And I took it long, and then I'm like, I don't know. It's not going up. Maybe it's because new guy pick. I sold it. But I mean, the stock has continued to go higher. And if you were just holding on and saying, hey, Warren's in, I'm in, you're now up 30 points in about 15 days. Not bad for a $280 stock. And especially considering the market environment that we're in. And that same 3-week period here, the S&P is probably down 3%. So you think about relative strength. Google has more relative strength than anything. I have egg on my face here because I haven't been a fan of Google for a while. I thought, the core search engine is under attack. But what I didn't consider is they're just working on so many other things. And I think, there's revenue going to be coming from elsewhere as well. So Google firing on all cylinders. This is the most loved stock in the market right now. It's Google.
Trading way above its all-time high. Way above it. Former all-time high, 306.89. I guess you can call that minor support here. Just keep an eye on the pre-market high. Looks like you have someone that wants to sell a little stock in the 312 handle, because I'm just looking, and that's over the last half hour. Your pre-market high comes in at 312.68. So the daily chart, you can see 50-day way down here, 200-day. We may never see it again. So there you are. There's a look at Goog, and if you want to look at the Goog with the L, which I never do. That's what the Goog with the L looks like. And someone just put in the chat here that Google has suppressed Microsoft. So you know how I like to keep track of my, top.
Really?
Yeah, that's what they said. I haven't added it up yet. I haven't looked yet. If you add the two, it could be because Microsoft has been getting absolutely whacked. So it could go Nvidia. Is it Apple and then Google? I mean, get it over Amazon, whatever. I'll take a look and update that for you.
Hey, Gabe, fan of the show for a very long time. Love you, Gabe. Fantastic question. Do you sell Google based on what you just said a few minutes ago about Oscar? Big difference. You know what the big difference between Google and Oscar is? Joel knows.
Oh, man. Let's break it out to new all-time highs.
I don't like shorting stocks to all-time highs. There's no overhead supply. It's blue sky territory. Completely different stock. Now, that doesn't mean I chase the rip, but it means I'm more inclined to buy dips on Google than I am on Oscar. Oscar has all kinds of overhead supply. It's broken, completely different story. But it doesn't mean, so there's still some of it applies. I like buying dips. I like buying weakness. If we get a dip after, maybe the market opens on Google, maybe you take that shot. But right now, Google is hot, hot, hot. Oscar's been cold, cold, cold. So with Oscar so cold, getting a pop, it's countered move. This move here today is counter to what the overall move is right now. Google is not. Google is just the hottest thing right now. Just being long Google every single night is just working. I mean, this stock right now, I'm writing it down on the list. This is a stock you just absolutely need to be long on overnights when you can. Being long Google and short SPY is probably just killing it right now. Absolutely killing it. So I don't know. Something will eventually turn it again and it'll get ugly again. This is what these stocks do. But right now, all the momentum is with Google. Oscar has one morning of momentum. So it's a big difference here. So I'm much more inclined, if I was shorting one, if you're telling me which one to short, I'd much rather short Oscar than I would Google.
And just with the Google, if you had a 311.85 price target on a quarter of your position and you weren't expecting it, I mean, look at it that way, or 312 or whatever. Respect your targets, or the hardest thing to do in the world is when you're running something up is just kind of, moving, not actually putting a physical stop in, but putting a mental stop in and saying, hey, I am just going to let it go and let it run. So that's where we're at. That's some of the news. We did have one acquisition here, Dennis. I don't know. Anybody really cares about it? Does anybody care about Green Dot?
Sure. I don't know if I care about it, but tell me the deal. Give me the news.
Strike's acquisition agreement will create new public bank and spin off.
Who bought this?
Boom. And
Smith Ventures.
Scott Financial Partners. I really haven't heard of any, but
so it's getting taken over. Give you the details for you Green Dot traders out there. I don't think I've ever traded in my life. Transaction result in Green Dot receiving $8.11 plus 0.2215 shares of a newly traded public company. Oh, that's kind of fun and exciting. So Green Dot trading up here. That's all I'm going to talk about Green Dot because I don't know much. Also for you people who are following the Grindr saga. If you've been following Grindr, at 8:30 p.m. or 8:30 a.m. this morning, so 4 minutes ago, Grindr just officially announced that they have ended talks on their $18 per share buyout proposal over financing concerns. So Grindr, which was trading up substantially just a couple of weeks ago when we had rumors that was going to get bought out at 18, it went from 13 to 16. That deal looks like it's not going to happen. Stock's back down and giving it all back. It looks like that deal is over.
Oh boy, oh boy, oh boy. Are we back to the place of origin where this rumor started, Dennis?
Yeah, but this is different. When they say it's over, it's one thing. So I have a strategy here. We're going to get Danny here on in a second. He's just getting his camera ready. My core strategy is when stocks have rumors and they pop and then they leak back, but the rumors are still on. They haven't like said we're out, it's over. Then I like to buy them when they get back to that. This is completely different. They're like, it's done. Like they're saying it's done. So I don't think this is the setup where I'm like, oh, it's back to its place of origin. Let's buy Grinder now. I think I'm probably just laying off this one. We do have our special guest here in the background. I think Brent is working us in the background here too. Brentster.
Yeah, he is, but I'm manning the controls here. This is good practice, Dennis. This is good practice. I mean, we didn't, we're going to miss the Brentster.
I know the Brentster's going to be gone for a couple of weeks, so we've got to figure out how to run all this stuff ourselves. So Joel's manning the controls here. If the special guest intro here goes bad, it's Joel's fault. Let's go.
Oh, well, thank you, Dennis. I won't get as mad at you as I did in the.
You were so mad at me last week.
Yeah.
I was yelling at you about the charts. I hate the 3 charts.
But you know what I did? I did a preemptive thing.
What did you do?
I texted you so you wouldn't call me. I didn't want you to call me. And I couldn't put that in the text. So I just said something nice in the text, and you said something nice back, and you knew not to call me. You knew not to call me. There he is, Danny Kirsch, head of options trading at Piper Sandler. Danny, do we just want to bore everyone let's just get it out of the way and tell them why nobody's going to be focusing on the financial markets this week. The Monday, Tuesday, and Wednesday are irrelevant days. Thursday's irrelevant Friday because the greatest rivalry in sports, Saturday, for all the marbles, once again, the Michigan-Ohio State game. Are you coming in, Danny?
I am. I'm flying in Thursday morning and then staying till Sunday. So I'm going Saturday. Are you going?
I've been sitting in the same seat since 1975.
Okay. So
this is my 25th Michigan-Ohio State game.
Wow. Yeah, I think I'm somewhere around maybe 12.
Okay. Wow.
I'm excited. The last few have been fun.
Yeah, I just hope oh boy, I don't know. We're 10-point. The spread's been moving in our favor, but I'm worried about those Buckeyes. But anyways, let's get on. People they get really mad when we talk about sports too much. So let's get on with our regularly scheduled programming here. You have been helping us out navigate these markets over the last couple months here, and we want to take over. I want you to take over here. And I want you to talk about what to own going into March.
Oh, so we put out a piece last week, and I think like near term, it's obviously the market's having a hard time finding its footing. You're seeing crypto roll over. You're seeing a lot of like the frothier parts of the markets get absolutely like wrecked. I think that speaks to also the like like really ties into like the AI trade sort of unwinding in crypto. It ties into a little bit with like debt being used to fund a lot of this stuff. And I think like the other thing that really changed is Google took a leg up in AI, and you're seeing like Oracle struggle, CoreWeave, and anything tied to OpenAI is really starting to weaken. That being said, on the positive side, into next year and even the rest of this year, it's like there are a few things that have gone a little better. One, it looks like we'll see, but it seems like the Fed is going to cut in December. I know as of a week ago, it seemed not likely. And then as of a day ago, it seemed more likely. And it seems like the market is going to push the Fed into cutting. Williams talked on Friday and he said, we are going to cut. And then into January, February, March, our firm has put out a lot of work on this. The big, beautiful bill, we're going to start to see the impact of that. There's 2 things that'll be very beneficial. One, huge tax refunds for consumers making between it's like 70 grand and 400,000. So it's a pretty wide area. And these are, upper middle income earners. And our view is that because of these big refunds, you're going to see bigger purchases made. These are new couches, new furniture, TVs, and that'll all start showing up, we think, into early next year. So the trade we like, and these are stocks that have really underperformed, are owning some of the furniture names. Now, they've been hit with tariffs. They've been hit with the consumer being squeezed. We see a lot of that reversing into next year. And the other benefit for some of these names, like a name like Floor and Decor, FND, it's down 40% this year or 35% this year. What we often see is names like this that massively underperform. They get sold in November and early December for tax loss reasons. And you've had a lot of dispersion this year as far as returns. and then people start looking to get re-long. So like a trade we always pitch is owning the 25 worst performing names in the S&P into next year. FND, I'm not sure it's part of the S&P, but this would fit the bill of underperformer. We are bullish on the name. We see a lot of tailwinds coming in the form of these huge tax refunds, accommodative Fed, and then we've already seen the Trump administration start reconsidering some of these tariffs, especially where they view the lower and middle consumers are getting squeezed. You're seeing them cut tariffs on some like groceries, like on fruit and vegetables. And who knows if that will continue. I saw this morning they got rid of Doge. It seems like they might just be throwing in the towel on a lot of these policies that are negative consumer. And our view is names that have been underperformers with potential tailwinds that no one owns, and I am telling you, no one owns any of these retail names. Everyone owns AI. Clearly, that's why it's been such such a dog. So, I like owning March call spreads in names like FND, Home, HD, Lowe's, and I get it. No one is ever bullish retail, despite how cheap they look, despite that they're crowded shorts. There are pockets of time where these names massively outperform, and we think the next few months is one of those pockets.
Danny, you got Target on there, and this might be the most hated retail stock of like the decade. I mean, we just think about the separation that has happened here between Walmart and Target. Maybe it's deserved, maybe it's not deserved. I mean, Target trades like 10 or 11 times earnings. Walmart trades 35 times earnings. You go into the stores, they pretty much feel like you're in the same store. Actually, Target maybe is a little bit classier store. But I mean, everybody's been trying to call a turnaround Target for the last 5 years. Is this finally the time? Is Target finally the time here? Or is this just another?
I think if it's not now, it's never. How about that? And this is why we like owning March call spreads and not owning the stock. Because every time they report earnings, it seems like the stock drops 10%. So I would say again, these are call spreads, not owning the stock. I think like a name like Floor & Decor, you can own the stock, but Target, we like the call spread sort of view. And again, this is where I'd imagine a very popular trade is long Walmart, short Target, and longer term, absolutely, Walmart will, I think, outperform Target. But for a trade for the next few months, you can certainly see a time period where Target could do better because the expectations are so low, the sentiment is so poor. And again, you can see a 20-30% rally on not a lot of good news. There's nothing good priced into this stock.
When do you usually see this, like tax loss selling? Is it like January we expect, this to start turning around? Does it happen before that? Obviously from an institutional money perspective, it's different. When do you usually see like the laggard trade really pick up steam? Like
so we write a note where it's just called just the biggest losers note, owning the 25 worst performing names in the S&P. We publish it right around December expiry, so the third Friday, and then you buy January call. So that's when our back test show, that's a good time to start in this trade. Is basically around I think expiry this year is D's 18th. So maybe that Friday or the Monday after, you start looking at getting long some of these underperforming names that have been sold for tax loss purposes. And I think the reason is because people just don't work the last week and a half. So there's a lot. So you're not really seeing someone dumping all their stocks on New Year's Eve or Christmas Eve.
Before that.
They've dumped them before that. And so we like getting long right around that time period. Retail, there's a lot of stocks that pop out in that space specifically. Energy has actually been doing a little bit better, but energy. And so that's when we write the note. That's when our back test shows it tends to start working. You also have one of the benefits, and even a week like this and a week like Christmas and New Year's, is anytime there's a lot of holidays, it's usually bullish because when time passes, especially when volatility is high, put deltas, it's true of call deltas as well, but put deltas are more relevant because generally investors sell calls and buy puts on indexes to hedge. And when time passes, the delta of the puts that dealers are short shrink. And the way you hedge a short put is you sell stock. When the delta starts shrinking, you start covering your short. That creates this like very positive feedback loop. So that's why July is a really good month to be long. November, typically, not this November, but usually is a good month to be long. In the last few weeks of December, we do tend to see some outperformance again, just because of holidays. It's fairly idiotic, but it's true and it works.
All right. So the big report last week was Nvidia. And the report the report was pretty darn good. The reaction wasn't. So there's China, there's Blackwell with Blackwell, there's all these comments coming out of the government here. Did the street treat Nvidia fairly off its report?
So our view is it's an incredible buy. Our analyst Harsh Kumar, who covers the name, he put out a piece afterwards and the earnings were incredible, and they're not doing really any business in China. So they massively beat on top line, on earnings. Their margins are still near 75%. So for our views, like we think it's a buy. I think really what's going on in the AI trend in Nvidia specifically is like it just became a sell the news, and well, could this keep going? Our view is absolutely. And if there is some sort of like softening on China US relations, that would be I think they made $50 million a quarter from China. That would go up to $2 billion a quarter. So again, there just seems to be so much upside, and even without China, this stock is going to continue to do well. I think the AI unwind trade is really a function of time of year, Oracle and CoreWeave CDS starting to blow out, and I think concerns around OpenAI specifically and anything tied to that stock following the release of, I think it was like Gemini 3.1 or 3.0, like the leg up Google took. I think is really starting to put into question all this open AI, future spend. So if you get rid of, and again, this is the market extrapolating very quickly, but if it looks like in a year or so, like OpenAI isn't going to really compete with Google and Anthropic, and they're actually the laggard, then you have a lot of companies that are, I'd say, tethered to the growth of OpenAI that might not, might no longer, might not no longer get those revenues. And Oracle is the name that specifically pops out with them saying what they were going to make $100 billion from OpenAI in future data centers. And if OpenAI, it turns out, in a year from now, it's like, oh, actually the $500 billion raise, that was the top tick. And it looks like Google's there, Anthropic's there, and Apple just decides, hey, maybe we'll just buy OpenAI and stuff it into our system, or it isn't the Mag 8 anymore. It's just like an also ran that Google created a competitor to Google that allowed Google to level up and basically keep their, I don't want to say monopoly, but keep their business kind of humming.
I mean, we saw multiple headlines from OpenAI over the last couple of weeks, and typically on those headlines we've been seeing stocks pop 15-20%, and then the stocks are just hot as hell. The opposite has happened. They're not getting the kind of pops they were before off these OpenAI headlines, and in some cases they're leaking it back almost instantaneously. I mean, is the market just exhausted from hearing like this OpenAI, like these pops on these stocks and just not believing it anymore? Like the market almost feels like it's not like believing that OpenAI is going to change the world like it did a month and a half ago.
Well, I think it's the debt issue. The big change in the last 6 months. There's been a lot more debt financing, so that's what people are getting a little concerned about. And the second thing is like Google is Google is there, and I think they like caught up, if not surpassed, OpenAI. And the difference between OpenAI and Google is OpenAI or Google can self-fund. They have a high free cash flowing business. OpenAI cannot. And I think that is the big shift that happened in the last week, and maybe the market is starting to recognize. I don't think it's a surprise that Google made new highs recently, while at the same time Oracle, I think it was like Google was up 10% last week and Oracle was down 20.
Yeah.
So I think this is like telling you everything you need to know where the market's going. And again, things move very quickly, but if you're going to get rid of it's like get rid of is such a strong word, but if you're going to basically make a large competitor less competitive that has to finance all of their growth via debt, it's going to affect a lot of stocks. And I think you're seeing that a lot with anything related to cloud, anything that's locked in big deals with OpenAI. I think they're really going to struggle. And it's like, if you're an investor right now, what would you rather own? Oracle tied to OpenAI, or Microsoft, or Google? It's like Google's already doing it. Everyone's comfortable using Google. And have you used have you guys used the new Gemini yet? To me, it's the same as OpenAI, except that I'm used to using Google.
Yeah. I mean, and Google, the big thing is Google doesn't need anybody else. Like that's the whole thing where,
Absolutely.
Oracle needs OpenAI, Microsoft needs, Google's Google. And maybe we should never bet against Google, because you just think, like, whenever you think Google's down and out, these people are the smartest people on the planet. They just figure it out, man. Like, the think tank over there is incredible. I've heard, stories on how, and obviously I've had some friends that work there, and they're just like, they let people just like free reign and just think of ideas and just think stuff up. I mean, the whole way the company itself runs is, pretty incredible too. It's not like, very, they just let, they let the smart, they hire the smartest people and they put them in places to succeed. And I mean, it's been a hard bet against Google for a long time, but Google has been down and out for a while. I mean, compared to, some of the other performances and some of the, up until 6 months ago, Google had lagged. That has changed, and something changed in the last 6 months. And maybe it is to what you're saying, is the market starting to realize that, hey, maybe Google is going to be the player in AI.
Yeah, and search is okay. They also, I'm pretty sure they own Waymo too. So it's like that was like a side project. So it just seems like everyone was writing off search, writing off the future, and OpenAI is going to take share from them. And OpenAI is announcing deals with Walmart and Amazon and and they're there, and you're going to be able to do everything via OpenAI. And it's like, well, actually, everyone's really used to using Google. There's a lot of older people who are very used to going to Google.com, and that's maybe the
I
chatbot
still
that'll
do.
actually win. And they have the most data, and they'll continue to have the most data, and they have the most money, and they have the smartest people working there. And again, the regulatory environment is great, and yeah, they're the best performing Mag 7 this year. Mag 7 name
you're
this year.
the best. Yeah, the best AI at the end of 2025. Kelsey, are you a Kelsey fan there? Do you like?
So I use either at work for whatever reason. PreMarket's blocked, but Kalshi is available, so that's what I look at because I can use it on my browser. But yeah, we like both.
Okay, just want to go about Mag 7 valuations here. We know pretty reasonable as far as Google, Apple above. Just talk about the historical significance of the PE, the Mag 7 compared to where it was in January 22.
So our firm has just been sort of flagging that the actual multiples of a lot of these Mag 7 stocks have been shrinking. I think a lot of that is Nvidia, and that's why we like the stock. We see the forward multiple 26. I think it was 45 2 years ago. So it's like actually these stocks incredibly are getting cheaper because their earnings have been so strong and continue to grow. And our view is like, again, it's so boring. Just if you want to be long, buy these high quality companies that have that I don't know. I don't want to say monopolies, but they kind of do. And also the regulatory environment is so much in their favor.
Yeah.
Again, this big, beautiful bill, we mentioned the middle class consumer is going to benefit, but also these companies because they can fully expense their CapEx and they'll continue just to dominate. And that's why, we think they're in such a good spot. And it's incredible because these stocks can make money in higher interest rate environments. They earn money on their cash, and then in lower interest rate environments, they're totally fine too, and that they'll benefit because the bubble will keep inflating. So it's like I think we're over that period of time where it's worth taking a ton of risk on these high growth, low revenue names and just go back to the boring, okay, I'll own Meta, I'll own Google, I'll own Apple. These stocks just work. And the reason they work is because the regulatory environment's in their favor. The consumer, gravitates towards these names and they have like huge edge on all their competition. And then when they don't, they can just buy their competition. It's incredible.
Being the head of options over there at Piper Sandler, you look at different strategies. One important part of options trading is ratio call spreads and strikes.
Yeah,
Where the
so we have
volatility is.
we have this email up here. So I think where people really hate using options, like to me, it's like, oh, why don't I use options? It's because I bought a call option, stock went up and I did not make money, or I bought a put option, stock went down and I did make money. This is so stupid. This is a way to avoid a trade we like that avoids this is into December. So it's fairly short dated, buying one call and selling two calls against it. So we look at Qs, SPY, IWM, and the idea is that the upper strike option is above the year-to-date highs. So as long as we don't scream past the year-to-date highs in the next 3 weeks, these trades cost little, small amount of money. The ideal scenario is that if things settle down, it looks like December is going to get a market starts, rallying into year end. You can make, the SPY in the Qs version, I think, the SPY version, I think it's like the 6. I can't see on the screen, but it's roughly $10 wide.
Yeah,
One by two call
you got
strikes.
for the Qs, you got the 631, 640.
Yeah, so you sell this, so you buy the December 631 calls, you sell 2 of the 640 calls. Qs are around 590 here. You pay a nickel. So the real risk in this is that Qs scream, they go up, 10-15% before you end. We think that's unlikely. If that is happening, that's just, I would, you just start buying Q shares, and so you could hedge out some of that taily risk, or you turn it into a fly. But we're not saying we're going to risk 20% into year end, but I think we can get a 5% rally for sure. Into year end, and the idea is you spend 5 cents for this trade. We get anywhere near the year-to-date highs. Hopefully you could sell it at a few dollars. The max gain would be $9. I don't think we're going to pin 640, but we start rallying. The other thing that happens is volatility will drop, so those calls you're short, those 640s, will start to decay. The delta will shrink. It'll act like a longer delta position, even though initially it's flat delta, meaning market up, market down shouldn't really move too much. But we think it'll actually act longer. So as we rally, volatility drops. This trade starts accruing delta, accruing premium, and then you have a very, very inexpensive way to make money into year end without having that issue of, well, markets rallying, why aren't they making money? This is markets rallying. You'll start making a few cents here, a few cents there, and then into December is hopefully when it really accelerates, especially if they cut in at the December meeting.
Danny Kirsch, head of options at Piper Sandler, talking risk and reward. A couple different trading ideas from Danny. Thank you so much. I'm going to try and sneak you on sometime here in December.
That'd be great.
What section do you sit in? Do you know what section you're going to be in?
Yeah, behind the terrible seats, row 65 behind the field goal post next to the student section.
Oh, so I'll be looking, and they'll be passing Danny Kirsch up by his bootlegs.
Yeah. I'm
Okay.
with the old timers to the I don't know, left or right, but it's a few sections over. But I'll be standing the whole time. I'll be there.
What's the actual section number?
I want to say, is it 28 or 35
Okay,
or
yeah,
something?
you're a little wet. Yeah, I'm not veteran over there. Okay, all right, Danny. Thank you. I'm sure I'll see you at the game along with
If you have an extra seat in your good seats, I'm happy to switch as well.
Hey, section 42, row 46. I've been there since 1975. So,
Yeah,
all right.
very nice.
I hope I see you. Go blue, Danny Kirsch.
Go blue. Thank you.
Awesome. Thanks, Danny. Great information, like powerful 20 minutes there, just, talking, even the Google versus Oracle stuff, just to enlighten us what's happening there too. Market is just kind of hanging out. We've leaked a little bit off the highs, but still fairly strong. I mean, you can clearly see the leaders here are Google. Other stocks are not as strong here today. I do notice chat pointing out Taiwan Semiconductor has went to the red. We are seeing some stocks roll over. Burke has went to the red. The value trade, not that hot here this morning. It can all change after 9:30. Remember, it's a different type of investor that is trading at 8:58 than there is at 9:30. And that's why sometimes you see these violent reversals happen. Not saying that's going to happen, but I'm saying it's always possible that you see, a lot of, reversals happen, because when big institutional money starts voting with their dollars, price changes quickly.
Okay. All right. That's a setup here. We have missed a lot on this docket here without the Brentster.
We didn't do any ratings. We can just fly through a couple just quickly to mention. Carvana is getting upgraded here at Wedbush this morning to outperform. Merck upgraded at Wells Fargo. Merck breaks through 100 for the first time in forever. Morgan Stanley upgraded at Wolf. MP Materials getting upgraded at BMO. JP Morgan upgrading 3 stocks, CIFR, CLSK, and Baidu, upgrading all of them as well. So, and then QS getting downgraded at Evercore. It's trading down slightly on that. So that's just a quick look at ratings here. Obviously, we can dig into some of this more on Stock Trader Network. If you come over there, try your trial, STN, free trial. Check us out.
Okay. All right. We are going to wrap things up here on this synthetic Tuesday afternoon on pre-market prep. We'll be here. We'll be here, folks, for the rest of the week. We'll have, of course, Thursday we're off and shortened day on Friday, but starting the week out in the green. Let's keep that up, folks. Thanks for joining us on pre-market prep.